Stocks were down Friday after the S&P 500, the Dow, and the Nasdaq were all briefly at record intraday highs earlier in the day. Friday marked the dreaded quadruple witching during which stock index futures and options and single equity futures and options all expire. This tends to stir up heightened trading volumes, but today, not so much. The big news was the S&P 500 was set to rebalance after the market close on Friday and add Tesla. Tesla is the largest ever market capitalized company to be added to the index. In other news, exactly 1 week after the FDA granted an emergency use authorization for Pfizer's coronavirus vaccine, late on Friday, Moderna's coronavirus vaccine was also officially cleared by the FDA. So now there are two. And I don't know about you, but I'm excited. Maybe I'll get both. And in other news, jobless claims rose to their highest levels since early September, giving investors reason to believe the grim data will compel lawmakers to advance a stimulus bill more quickly. And in other news, our dutiful lawmakers remain locked in discussions over another coronavirus relief package and legislation to fund the government for the fiscal year. At this point, I'm not really sure what the discussions are all about because these days, all one needs to do is push a button and trillions of dollars will magically appear. So, what's there to talk about? Oh, I know. Maybe it's like the New York Stock Exchange and the discussion is all about who gets to hit the button. Yeah, that's got to be it. And of course, analysts still believe a stimulus deal will get passed in the relatively near term because the clock is ticking. So, did the stock market get ahead of itself? Well, let's take a look. Let's first take a look at the 2-year weekly on the VIX, the volatility index, and the symbol is $VIX using stockcharts.com. And as you can see here, we may be having a double bottom here. This bottom in the August to September timeframe, and then the current time frame, say late November into December so far, another bottom. Now we're at a 2157 level and looks like it may drop back down here to 20, but I think it's just going to trundle along the bottom here. If you go down to the lower portion of the chart, you can see the MACD, that fast line and a slow line, they look like they're moving together. So that lock is going to have to be broken with the fast line getting enough steam and moving up through that slow line, but it doesn't look like it has it yet. So I think we're on hold for now. I think this means that the stock market is just going to continue sliding up that moving average, which I'll show you here next. And to stick with the theme of the 2-year weekly chart, we're taking a look at the spiders, the SPY, and the close on Friday was 369.18. And so what I meant about the price chart sliding up that 20 EMA is just this. You can see that it's very low grade move on up. Now, every once in a while, it gets to be a little too elevated and stock market gravity will take hold, such as there, such as here, and we're getting close again. Not quite yet, but soon enough. Now, if you go back here, you can see a similar melt up along there, and then all of a sudden it breaks and down you go. So this here too has been a very nice melt up going on up, but they're difficult to catch simply because there's a lack of volatility. But sooner or later it will break, and I think it actually may be into next year before it does. But keep watching that. And the VIX will also give you heads up. Now, here into volume, that's not going to tell you too much. The MACD, you can see the melt up through here and then mostly through here. It's when the fast line and the slow line move together. Now this portion is above the zero, so it's going to be moving on up. The same thing can happen on the downside when it's under zero, then you just continue with a slow drip on the way down. But again, here, this sort of melt up in the last few months. Moving on down here into the MAC, Not going to tell you too much here. Price rate of change, same thing. You can see that melt up there, and you can also see it here. So watch for those. Those are very good if you have an individual company and the fast line and the slow line start to intertangle and continue in a sideways fashion, then your stock is moving on up. Now, here into relative strength, as usual, I keep talking about that downward slope here. We haven't been able to break up. Even though the price chart's moving on up, it's doing it with not a lot of strength, not a lot of basis of support. So that's what happens. It'll break, and then when it breaks, down it goes. This chart, you might even be able to go that far back and draw it through there. So something to keep mindful of. Stochastic's not going to tell you too much. We're getting into this overbought territory. I would imagine this is going to turn over, but it might take a month, maybe two. Same thing for the Williams. We're in that upper territory. Stock market will continue moving on up until it breaks down. Back up here to the price chart. One last look. And again, just keep holding on, but just make sure that your portfolio is well positioned in case we have another break. And for today, that's ChewDog Charts. Thank you.